Hey everyone, do not sell your Bitcoin in 2025 with plans to buy it back in 2026. I know what you're thinking. I know the 4-year halving cycle. I know you want to increase your Bitcoin stack beyond just its standard growth rate. And I know you think you have figured out a way to outsmart it. I'm just telling you, it's a bad strategy. It's super risky, and you are likely to fail with that strategy. So let me tell you all the reasons why. Well, in investing, history is not a predictor of the future, especially when it comes to pattern recognition. So people are constantly figuring out, little patterns that they are certain are going to repeat, where a stock or a bond or Bitcoin or something, let's say it's usually up on a Tuesday and down on a Thursday. Well, inevitably, some genius figures out that they're going to start selling it on a Tuesday and buying it on a Thursday. Sell it when it's up, buy it when it's down. Well, inevitably, when they do that, that works great the first few times. It's just like at a casino, when you sit down at the blackjack table or poker or whatever, it's often that you win the first few hands. It gets you feeling good. You're in the zone. You've got this. You're getting that feeling that you got this. But, your $1,000 turns into $10,000 and you're positive you figured it all out. And then you go all in on a full house and someone else has 4 of a kind and you lose it all. So it happens all the time. Well, the same thing happens in Bitcoin. People are constantly outsmarting themselves. So I've had people, for example, tell me that they were so certain of the 4-year halving cycle that they borrowed against their Bitcoin to buy more, planning to ride the 4-year halving cycle. The problem was the price corrections did not work out exactly as they had planned. They got liquidated and they lost all their Bitcoin. So instead of having 3 Bitcoin, 4 Bitcoin, 5 Bitcoin sitting on, $500,000 right now, they're sitting on 0. And why are they sitting on 0? Well, they're sitting on 0 because they thought they had figured out a pattern in Bitcoin that they could leverage to borrow a little bit of money or to borrow against their Bitcoin. And then it just didn't work out. They got liquidated. It happens all the time. People are constantly guessing wrong. Back in 2021, people thought they were going to do the 4-year halving cycle, just like people are thinking they're going to do it now. Sell in October, November 2025. Buy back in, a year later. People are thinking they're going to do the same thing again. And in 2021, the market started correcting. It went up to $64,000 in March, came back down over the summer to $30,000. A lot of people thought, oh, here it is. Like, this is the halving cycle. And ultimately, they got out because they were like, nah, it's definitely going down. So, they're selling Bitcoin on the way down, 40,000, 30,000, whatever. Then it runs up to 69,000. Well, as it runs up, they're like, oh no, it's running away. That was the dip. And they had sold it at $30,000 or $40,000, and they're buying back in at $50,000 or $60,000, which is literally working the opposite of the way it's supposed to be working. They've essentially missed out on 1/3 of all of Bitcoin's upside. If you sell at 40 and buy back in at 60, 1/3 of all of the gains that will ever happen with Bitcoin, you have missed out on, because now your cost basis is 60,000 instead of 40,000. So all of the future upside could have been much higher. But then inevitably, now Bitcoin actually does go through the dip in 2021, and it goes from 60,000 or 69,000 down a lot lower. And they just rinse, repeat. People are constantly screwing this up. So please don't screw this up. The pattern recognition thing always works great until it suddenly doesn't. People are constantly losing money on these strategies that involve buying or selling and rebuying. And they're just constantly, I have these conversations all the time where I'm having a conversation with somebody and they tell me, well, they got in at Bitcoin, they got in early, they bought a bunch of Bitcoin at 10,000 a coin or something like that. I'm like, oh, wow, well, good for you. You're up 10x. And they're like, they get this sheepish look on their face and they're like, well, I would have been up 10x, but, and then I hear this story, how they outsmarted themselves and ended up with way less Bitcoin. Totally unnecessarily, completely unforced error. So history is not a great predictor of the future. In addition, and I've talked about this before, in the case of Bitcoin, if you look at the last 10 years of Bitcoin, Bitcoin has been the best performing asset in the entire world every single year, the last 10 years, with certain like 2 or 3 exceptions. Okay. If you run all the numbers, all of the gains, if you had missed out on just 2 24-hour periods every year of Bitcoin's growth over the last 10 years, you would have missed out on 100% of the upside of Bitcoin. So 100% of the upside of Bitcoin happened in just two 24-hour periods each of the last 10 years. Now, that's insane. What that means is if you are out of the market for even one, much less two of those 24-hour periods, because your timing is not immaculate, you miss out on all of the gains of Bitcoin. That is an extremely high penalty to take, all because you're trying to stack just a little more Bitcoin by timing things just right. So just don't do that. Look, if the 4-year halving cycle could be timed the way you're thinking about timing it, or any other random idea you have about how you're going to sell it and buy it back and sell it and buy it back, if you could do that, Michael Saylor would be doing that. There are people that have way more Bitcoin than you do, that are way smarter than either of us, me or you or anybody else listening to this video. They have way better access to macro analysts. They have way better access to the insiders of Bitcoin. There are people that, if it could be done, they are in a much better position to do it than you or I. And those people are not trying to time the market that way. They are not trying to ride the 4-year halving cycles because they are smart enough to know that they're going to lose if they try to do that. They're also smart enough to know that you're going to lose if you try to do that. Additionally, we are in the prime of Bitcoin's life right now, where we're right on the verge of sovereign state, country adopting Bitcoin, sovereign wealth funds adopting Bitcoin, major corporations adopting Bitcoin. And at some point, there will be a massive run, let's call it from, the $100,000-ish to $200,000-ish, that happens in a very short period of time. So at some point, we're going to get a doubling or a tripling of Bitcoin that happens in a very short period of time due to massive adoption at a grand scale by countries and companies and sovereign wealth funds and family offices and all of that sort of stuff. And the question is, are you going to be in the market when that happens? Or are you going to be out of the market waiting for a dip? And if Bitcoin, let's say, it bounces around. Right when I was starting recording this video, it was 106,000. So it's at 106,000. It bounces around. It gets up to, 120, 130, 140, 150. Pick your number. Everybody thinks they're going to outsmart Bitcoin at some magic number that they think feels just right to them. And you sell. And the next thing we find out is that multiple countries, the country of Switzerland, adopts Bitcoin as a strategic reserve asset, or other countries do, the United States or whatever, and then suddenly you're out of the market. Bitcoin triples or doubles or whatever, or even goes up by 50%, and you are out of the market. And it's just, you're never going to get that gain back. That gain that you missed out on, you can never get back in the rest of the history of Bitcoin, unless you try to do it again, which is going to result in the same thing, which is like, oh, dang it, I played it wrong on the last time. I missed out on 50% or 100% of Bitcoin's gains, and now I got to time it just right the next time. It's going to happen again. So in the spirit of sort of reliving bad decisions by others, in the last halving cycle, tons of people missed out on Bitcoin because they were certain it was going to drop. The price was going to drop in 2022 to at least 13,800. And it never did. The lowest it ever got was 15,500. And there's tens of millions of dollars sitting in buy orders on Binance and Coinbase and all of that of people waiting for 13,800. And it never came. So here's the problem. The problem with the strategy of timing is, first of all, it's not going to work. I'm just going to tell you up front. But second, you have a problem of numbers. Okay, at what point is the peak of 2025? The answer is you don't know. I don't know. Nobody knows. You don't know. And I just guarantee that whatever it is, you're going to be wrong. Because we're all going to be wrong. Because it's completely unknowable by anyone. So, where's the peak in 2025? Nobody knows. Which means you're going to get it wrong if you're trying to sell your Bitcoin in 2025. Where is the trough in 2026? Even if there is one. If there even is a trough in 2026, at what price? The answer is you don't know. I don't know. Are you going to buy it when it's down 20%, 30%, 40%, 50%, 60%, 70%? You don't know. I don't know. Absolutely nobody knows except in retrospect. And in retrospect, everybody thinks they remember feeling like it was especially down and that they should have pulled the trigger. Well, the same in the peaks. After the peaks are clearly over, everybody remembers thinking that it was really high, and they remember thinking that they should have sold. And that is just natural human psychology. Everybody remembers things in a more favorable light than actually happened in real life. Had they actually been correct, hey, one second, Ralphie, let's go this way. So let's go this way so we don't run into the So people are constantly remembering things differently than they actually happened in real life. The truth is, people thought something was expensive or cheap a bunch of times, and they just happened to remember the time when they thought it that was closest to the highest or low. But it's just, people are just horribly bad at predicting those sort of things. Also, as a more recent example of people who missed out on timing. So in early 2024, on January 10th, the Bitcoin exchange traded funds, the ETFs, were approved. So you would expect that the price would go up, because the price was in, leading up to that was in the 30s or 30,000s or low 40,000s. But there's this sort of pattern that people see from time to time, which is buy the rumor, sell the news. That means oftentimes people will, an asset will go up on a rumor, and when the rumor ultimately becomes true, it will go down. And so this happens enough that people had started to rely on it. They were like, okay, so, and they sort of expected this, because after the Bitcoin ETFs were approved, even though they were a huge deal, and even though Bitcoin ultimately became the best performing asset of 2024, for a period of time, hold on, let me turn the dog around. Hey, let's go this way. Even though Bitcoin became the best performing asset of 2024, there was a dip after the Bitcoin ETFs were approved. They were approved when the price was around 46,000 or 47,000. The price ultimately dropped over the next month to barely into the, just under 40,000 very briefly before it went back up. So people were like, we've seen this movie before. We're going to do this again. If Donald Trump is elected president on November 5th, we can expect that it will be a buy the rumor, sell the news, right? So the rumor is that, Donald Trump's going to win. The news is Donald Trump does win. So there were a bunch of people that sold their Bitcoin at $65,000, certain that there would be a dip after Trump won. They would buy back in on that dip, and then they would end up with 30 or 40% more Bitcoin or 20% more Bitcoin by doing that strategy. Well, of course, that strategy didn't work, because although the buy the rumor, sell the news sort of pattern had played out a relatively consistent number of times, as soon as everybody loaded up on that strategy, it turns out that that was not the case on the November 5th election. On the November 5th election, Bitcoin went from about 65,000 and marched with some price corrections pretty consistently up to 106,000, where it is right now. Now, there was a price correction from 108 down to 90, but there was never a price correction that gave the $65,000 crowd a chance to buy back in cheaper. They never got that chance. So all the people that sold at $65,000 right before the election or the day of the election on November 5th, planning to buy back in on a major post-election dip, all those people sold at 65,000. They are staring at their portfolios at 106 thinking, I'm an idiot. The answer is, yes, you are. I'm sorry. Don't do that. Don't do that. I've been saying don't do that over and over and over a million times, and people keep outsmarting themselves out of Bitcoin. Please don't do that. You can't time it. I can't time it. Nobody can time it with any asset. It's not unique to Bitcoin. Any stock, any bond, anything that has huge upside in the long term, don't trade it. It doesn't matter if it's Amazon, Apple, Google, Facebook, Netflix, Nvidia. Don't trade the stock. If you're sitting on a stock with massive upside, just sit on it. Buy as much of it as you can, hold it as long as possible. Do not try to ride the ups and downs. Even in the early days of Bitcoin, I've talked to a lot of very early Bitcoiners that bought Bitcoin in the double digits, meaning between, $10 and $100. And all of them tried to trade it. They tried to trade it because they were certain they could trade the volatility and end up with more Bitcoin. And every single one of them I've talked to, which has been a lot at this point, at the various times I've gone to Satoshi Roundtable in Dubai, which is one of the major Bitcoin conferences. It's a private invitation only event, where a lot of the original OG Bitcoiners are. So when I go and I have those conversations with early Bitcoiners, I always ask them the question, which is, did you end up better off than if you just sat on it? 100% of the time they've told me no. They were like, no, I own way less Bitcoin because I thought I could trade it and time it to get more Bitcoin. Every one of them has told me that. Every one of them has cheated themselves out of a lot more Bitcoin that they would have today because they tried to exploit a pattern because they tried to find a glitch in the matrix they could exploit to end up with more Bitcoin. And it just doesn't work. It just failure, and more failure. So please don't try to do that. Please do not try to time the market. Please do not sell your Bitcoin in 2025 with plans to buy it back in 2026. Please do not try to time the inauguration, which is, I guess, what is that, tomorrow or whenever it is. Don't be playing these games of selling before something, buying back after something, selling in 2025 to buy back in 2026. You're just going to lose. You're just going to lose. Everyone does. And it seems like some people just have to prove it to themselves by learning the hard way that they can't time the market. So I'm just here to tell you, you can't time the market any better than anyone else can time the market. You just can't. I can't. You can't. Michael Saylor can't. Nobody can. So don't try it. You'll end up worse off. You'll end up with a lot less Bitcoin than you otherwise would. And for an asset that's got 10x upside between here and $1 million and 130x upside between here and 13 million, which is sort of base case for Michael Saylor, why on earth would you not be happy with 130 times your money? If you're not happy with 130 times your money, you need to go make more money, like the hard way, like sweat, work more hours, make more money. Because if 130 times your money does not enable you to accomplish your objectives, that means you need to start with more money, well, in whatever form, rather than just rely entirely on the appreciation. So please don't outsmart yourself. This is a public service announcement. Please do not outsmart yourself by selling your Bitcoin in 2025 with plans to buy it back in 2026. You're going to fail. You're going to outsmart yourself. You're going to end up with way less Bitcoin. And if that strategy was effective, believe me, I probably read more about the 4-year halving cycle and the patterns of Bitcoin than anyone that's ever going to watch this video. So if it could be done, I could do it. If it could be done, I would do it. And I can't, because it can't be done. And if it could be done, Michael Saylor would do it. If it could be done, BlackRock, Goldman Sachs, they'd all be doing it. They're not doing it because it can't be done. So don't try. Anyway, so that's your public service announcement. The best thing you can do with Bitcoin is buy as much of it as you can, hold on to it for as long as conceivably possible, and that's it. It's a simple strategy that does not involve timing it. It does not involve picking a perfect time to buy, picking a perfect time to sell. You don't have to worry about doing any of that because none of that stuff works. And so all you got to do is accumulate as much as you can and sit on it as long as conceivably possible. That is the strategy for success. And that has been validated by literally 100% of the people I've talked to in Bitcoin. Every one of them has told me they would have ended up better if they had just bought as much as they could, sat on it for as long as possible. They all would have ended up with more Bitcoin than they have right now because they just outsmarted themselves. Please don't outsmart yourself. It's a simple game. So buy and hold. Have a great day, everyone. Thanks.